Aberdeen City Council just raised a bond. First municipal bond in Scotland. And of course, local authorities in the 19th century raised bonds on a regular basis. They haven't done so for a period of time, but this is something that we may see more of. The case study here was the University of Leeds. Anyone heard of their bond issue? How much do you think it might have been for? £250 million for large-scale both growth and reinvigoration of their campus in the centre of Leeds. Now, bonds are not for everyone. There is a minimum entry ticket, as it were. But don't forget the issue of private placements, which are designed to be smaller and more flexible. In fact, we've had 14 in the university sector since January 15. What we heard at the Leeds workshop was, and I think the phrase which I picked was, the shine has come off the bond market, particularly since the uncertainty of Brexit. There will be more important to the credit analysis that's required in each case. But there is a significant sum of investment capital waiting to invest and looking for higher relative yields. And I think what was stressed by Rothschild at the meeting was the investment market is faced with choices. Because of historically low and sustained low interest rates, there's very little to be made in holding reserves in cash, and there's very little, an increased risk in holding reserves in equities. So the institutional investors are looking to broaden their portfolio, but to find higher relative yields, particularly in the commercial property markets. And of course, particularly in the higher education sector, we're seen as high credit quality. So bonds, for some places, yes. For more places, for private placements. And through time, we may see municipal bonds. And as I mentioned briefly earlier, municipal bonds being raised in Aberdeen. Municipal bonds are currently limited, of course, by the fact that, particularly in the public sector, and local authorities can borrow loan debt quite cheaply and quickly from the Public Works Loan Board, in effect, the mechanism by which the government borrows cash. And of course, we have, at the moment, centralised property taxation systems and no real specific tax incentives to invest in bonds, compared to, for instance, the United States, where there is a tax incentive for municipal bond. However, one is obviously the evidence base, the availability of big data, our skills in modelling and performance metrics, hopefully the capacity we have in terms of service design and delivery, and of course the networks we have both with companies and with local communities. So whilst the social impact bond market has been slow to get off the ground, I think judging from the session we had in Leeds, I think from the Cabinet Office, now may be the time to think a little bit more seriously about the potential for social impact bonds.